Okay, so this class is about levels. So we're about to go over key levels. How do I find levels to pretty much like how do I find my rejection levels, my triggers, and all of that, right? So this is what that class is about. So the first thing that I want to go over is how do I even find my levels? Well, a lot of you guys know that I don't like the 3-touch rule. How many of you guys, when you first started trading, you heard about as long as it touches 3 times, that's a level? So pretty much everybody. So that's kind of like the first thing. Even I used to do that, or even used to teach that. So it's actually not all about that, right? The best way to trade is to find aggressive moves. What I mean by the aggressive moves is you want to see the stock price actually reacting off that level pretty aggressively, right? And then we plot that as a level. Okay. So that's how you find basic levels. Okay. Now, a new thing that I have added to this year's trading, you have to be adaptable when it comes to the market, right? You have to be able to make changes and just be adaptable, right? So a new thing that I have found that, and I found this on my own, so you can't go on YouTube and try to look it up. It's just something that I kind of noticed on my own just from experience. And I think that they've been pretty accurate, and I kind of want to show you guys. So what they're called is gap levels. I have so many people asking me about gap levels. Jay, what are gap levels? How do you trade gap levels and all that, right? So gap levels are levels that are made. So put this in your notes. Gap levels, and I'm gonna say it slower if I'm going too fast. Gap levels are levels that are made from creating a gap, right? So for example, when we look at this to kind of make that make sense, right? Using the replay mode, I used to, okay, so this was a good question. So for my people that's been here for a while, they was like, Jay, I thought that only worked with XPX. I thought the same thing too, until this year, it has showed me that it works with everything, okay? So it's pretty cool. So I used it with Boeing today, right? All right, so here we go. So this is do everybody see the gap on Boeing right now? So this is the gap, right? This is how it looked when it opened. This is the candle. This is today's candle. So did everybody notice this gap on Boeing? Yeah, I noticed this gap right here. Yes, no, maybe. Okay. So normally when you see a gap, people just draw the gap, right? And they be like, okay, hold on, let me draw it for you guys real quick. They'd be like, okay, let me just go ahead and, draw that gap, right? So now if we know if we go above here, we can gap fill to the upside. And that's kind of like, that's a common thing. But what I noticed was actually, let's not focus on the gap. Let's focus on the actual levels that create the gap. That's what I focus on. So yes, I might draw a gap, but my main focus is actually not the gap itself. It's the levels that created the gap. So I actually don't trade gap fills. That you can trade gap fills if you wanted to, but how many of you guys have tried to trade a gap fill and then the stock kind of just ran straight to the gap, let's just say that you've seen the gap and then you was trying to say, okay, I'm gonna buy calls, so we got a gap above, and you see that the gap basically just rejects and go back down. How many of you ever been in the trade like that? That's normally a beginner's move, but that happens a lot. So I'm trying to give you guys a background on how I even found this strategy and just this way of trading, right? And I literally found it from that. I used to be an admin and Blueprint, right? If you don't know what that is, do your research, right? And I used to notice because there was a lot of members in there, and I used to notice when a lot of members make trade and I was doing mentorships and kind of seeing traders that are failing, I had noticed that a lot of them always used to say, well, Jay, I took calls because I seen the gap above, and when I tried to take it, it rejected and came back down. It never filled the gap. And they would keep buying calls and calls and calls and calls because it's a gap above, and by the stock is down $10. They didn't blew their whole account trying to trade a gap, right? So I started noticing it. This was a pattern with a lot of newbie traders. So then I kind of pulled up to the charts and I was like, it's crazy how accurately these gap levels are actually, can give a lot of trading opportunities rather than trading the gap itself, right? You still can trade the gap by all means, but I'm saying there's other ways around it, right? So let's get into that. So whenever I see a gap, I normally leave my pre-market off on TradingView. I don't trade with pre-market on TradingView. Maybe think or assume I might do it, but most of the time I trade with the pre-market off. Why? Because I want to see these gaps, right? If a stock gaps up, gaps down, I want to see the gap because I want to make trading opportunities off of that gap, right? So that's exactly what I'm about to do. So I'm going to plot my level. So you see, I got the top of my gap right here. Let me move this. Y'all with me? Y'all lost? Y'all with me? Let me know. Y'all still with me? Y'all good? I'm making sure. Okay, cool. I don't like going into class, lost. Okay. So if you look in the chat, just to like go back in the notes, that way you guys can understand like how I'm doing it live. Yeah, you can find gaps with extended hours on too. It just for me is better for me to turn them off in my opinion, but it's up to you. So let me just pull up what I said in the chat. That way you guys can kind of see like my mindset on the trade today. Obviously the contract sucked, but overall you guys can kind of see my idea, and I'm gonna show you XPX too. So in the chat I said today I said where is it at? Okay, so here you go. I was off a little bit, but it's okay. So I said I decided to take BA shorts, extremely overextended on decreasing volume. I'm gonna teach you guys that, but let's focus on the gap part. I said hard to get a good short entry on this ticker, but 209 through 209.25, and you can say 30 if you want to, it was 5 cents off, gives room target. So a lot of people were trying to figure out, Jay, where did you get that rejection level from 209 and 209.25, right? Between that area. And I got that from the gap level, right? So when we look at it, I plotted the top of that gap, and then I plotted the top here. So do y'all see? Because like when we draw the gap, it's going to look like this, right? So what I did was I just took the gap off, and then I just left the levels. Do that make sense what I'm saying? Like right now, you would just draw a regular gap because it's a gap. But instead of me doing that, I'm taking the gap off and I'm just plotting the high and the low of the gap, right? Okay, so now BA has two options. BA can reject right here, the bottom of the gap, or it can reject the top. Obviously, when we seen BA, we seen that it was already up there. So I took it, yeah. So after it failed, I took puts, right? So let's kind of see how that kind of played out today. So where's my play mode at? Okay, damn, that was too fast. But let me just go to a lower time frame. So there we go. So you see how accurately it rejected that gap, right? So I literally, once it broke above, I'm like, okay, I took puts maybe a little bit, like a little early, because sometimes they, sometimes it might just reject before it hit the gap. And I'm gonna show you an example of that on XPX today. But do you see how accurately it kind of made, like it literally rejected it pretty accurately, right? This is on any time frame. You can do this. You can find the gaps on any time frame that you want to trade. We're going to get into time frames in a minute. I'm just trying to get you guys to understand the accuracy of, like, you see how the gap level played a part, right? In the form, you can say it's like a break and retest, but right now we just focusing on making trading opportunities. See how accurately it rejected that level. It created a double top, and then it just rejected it, right? And it came down. So now you got to see, like, I didn't even know it was going to do all this double top and stuff, whatever. But I just pretty much just took the gap. And if we had a candle close above, then obviously I would cut it. So it was pretty simple trade, right? And I'm gonna show you guys so many examples of this, so you can kind of see how accurately the gap levels are, right? But overall, that was how I took a rejection there. And I mean, it just rejected pretty clean. If that makes sense so far, I didn't lose anybody. Okay, so let's go look at another example. Let's go look at XPX today, the actual trade on why I took puts, right? So pretty much the same thing. So right here, now I'm about to really get y'all on this one, okay? So in the chat, I said, literally go look at what I said, guys, so that way you know kind of like my mindset throughout the trade. So ideally, what I wanted to do you guys see this gap first? Make sure y'all see it before all this happened. Y'all seen that it was a gap, right? So in the chat, I said, okay, damn, XPX broke. Or let me just read it. That way I can kind of see where I'm coming from. So, okay, I said, okay, guys, XPX broke first rejection point. So I was assuming that because like I said, we can either reject this level or we can break above and reject the next one, the top of the gap, right? We don't, for my people that be like, Jay, how do you know which one is going to break? We don't know that. We literally don't know which one is going to reject to. We just know, and I'm gonna show you it's for calls too. You can do it for calls too, it don't matter. But we don't know which one is going to reject to, but we just know that the price is going to do something at one of the levels, right? So either if you don't like the trading opportunity at the first one, if it breaks above, you would have literally just cut it and then take it back again at the second one, right? So if you look at the messages, when I said, okay, XPX broke the first rejection point. So that was this, it broke it, right? So since it broke it, I don't want it anymore. Next, I said, looking for rejections at 39, 26, 55. If you see where I got that level from, this is that level, right? So I was looking for that level. Now, people might ask me, Jay, why did you take the trade early then? All right, that's where you look at other stuff, right? So guess what? Old gap levels still are levels, right? So let's delete all of this and let's go look at other gap levels from previously, right? So when we go draw this gap level, look at that. So what did XPX decide to reject? It rejected a previous gap level, right? On the money. Do you guys see that? Did y'all see that gap right here? Let me draw it. I'm gonna draw the gaps first and then I'm gonna just delete the. So that was a gap. You guys see that gap? Yeah, see that? Okay, so I deleted it and then boom. That's what made me take XPX puts. Now, I'm not gonna lie to you guys. The contracts, bro, this was a nice move, but the contracts just wasn't moving today. This was literally a nice, bro, this was a 22-point rejection. I took it on MT4 and I actually made like $3,000, but in options, it just didn't, the contracts wasn't moving. But I actually took it on the MT4 because, you know, those aren't contracts. It's literally like either the stock is either is going up or down. And I made $3,000 on this move, right? This is actually a 20-point move is a big move, right? So the contracts just didn't want to go, right? But overall, you guys see where I got that rejection point. So sometimes old gap levels can be new levels that you could take our trading opportunities off of, right? Does that make sense? And it's going to take some practice with it. It's going to, yeah, when the gap, okay, this is a great question too. Are the gap levels invalidated once it's filled? Yes. Once the gap is filled, then you move on into the next one. So as you can see, this gap level, was this gap level ever filled? This is why I used it again, right? Exactly, right? This is why I used this gap level again, because it was never filled, right? We could have actually brought it down a little lower here. I mean, well, you would just leave it right there, but like it was never filled. It kind of just gapped, like, y'all see that weird stuff? It kind of like, it gapped above, and when we got back to that gap, it literally gapped down. So, you know, so that's me personally. So that's a good question. So the next one is, hold on, let me answer the question real quick. The first one was, can you just buy in the money contracts so they move better? Yes, in a way, yes. But overall today, the contracts wasn't moving just in general. But if you wanted to, definitely can buy in the money contracts. They are a little bit more expensive, but they save you if any pullbacks or any BS were to happen. So it's kind of like give or take. You feel me? It's like, you know, it's like you can go at any time. If you can afford in the money, go in the money. If you guys look at the auto trader, when we be doing auto trader, I normally go in the money on auto trader, or maybe like right out the money, like right at the money. I don't really go out the money on auto trader, if you notice that. So that's to protect, you know, my capital and because we have it. How about when it's filling? So yeah, this is a good question. So is how about when it's filling during extended hours? So if it's filling during extended hours, most likely it's not going to open up as a gap. But if it does, that's different. Like I said, I leave extended hours off for this strategy. So I don't even pay attention to like what the stock is doing during extended hours, because I look at it, what it's doing when it actually open. So for me personally, I can't speak on the extended hours. When you have them on, I turn them off for this particular strategy. I turn extended hours off, if that makes sense. So for this particular strategy, I turn them off. So so let me show y'all some more examples. Does theta matter when you sell same day? Not really. Not really. A lot of people think that theta just come out like as soon as the day open. Like, no, it gradually, like as it get closer to your expiration, it gradually start killing your contract. It's not like right in the morning theta killed it. You know what I mean? It's like throughout the day, like as it get closer to your expiration, hour by hour, minute by minute, that's when the theta is kind of just eating it slowly. So yeah, we're including wicks. So like, okay, so yeah, wicks. So actually, so this is y'all asked some good questions today. So somebody asked, does the wicks, like they're looking at these wicks, right? So whenever you're looking for rejections or support bounces, you want to see wicks because that is showing what, guys? Why do you want to see wicks at a level if you're trying to take puts? Why do we want to see wicks here? Wicks are basically showing you the rejection, right? That means buyers tried to push it above this level. They could not, they failed, and it's actually showing you the rejection, right? If you're not seeing wicks at your level, you're doing things wrong, right? Because if you're not seeing wicks, that means it's not rejecting. So let's say that, you know, a stock is just coming straight down to a support level and you don't see no wicks or anything, more than likely it's just going to clean straight through it, right? You want to see wicks, right? You want to see some type of rejection, right? That it doesn't want, it's having trouble going past that level. You don't want to just see clean bars. So when we're looking at these rejection points, guys, that's what we see. We want to see wicks, right? We want to see people, we want to see them trying to break it and failing to do so, right? Sometimes I get confused on where to draw your lines. Would you draw your lines at the wick? Oh, that's what you mean. So for gaps, okay. So if you're drawing a gap, you actually draw it at the lowest point and the highest point, right? So let me zoom real in so I can get you guys, because I mean, it's going to reject most likely to a T. It's going to reject to a T. So I'm about to zoom all the way in so y'all see exactly how to draw proper gaps, right? So with proper gaps, you want it the lowest point, right? Actually, my bad. I'm tripping. The gap was here. This was the original gap. My bad. Hold on. That level didn't even matter anyway. We didn't even use it. When I'm talking about the actual gap. Well, no. Okay, so this is how the gap started, obviously. This is how the gap started, right? This was the actual gap. And then, like I said, sometimes it gets to that level and then it reverses. Actually, this is a great learning point. I'm going to show you guys in a minute. But this is how the actual gap was. And then once we tried to fill some of that gap, then you change it to this, right? Everybody see it? You see how we're using that lowest point. I mean, the lowest wick, all of that. You want that because that's going to be the level that is going to react to immediately. You know what I mean? So it's like, you don't want to do this. I see too many people when they drawing gaps, they just do this. No, that wick right there, like that matters. This low point right here, that matters whenever you're drawing gaps. You want every point matters. So if you have to go on another time frame to get a better picture, every point matters, right? People was getting on me about the Facebook trade where they was like, Jay, why do you have 137.27? Like that's a random number. That was literally the highest point of the wick. And it rejected immediately as soon as it hit that level to a T. So whenever you're drawing gaps, you want, like literally, you want to have that high. Let me go back there. You want to have that right there. You want to literally draw the thing from right there all the way to the highest point, okay? Right, did that make sense? Do I prioritize daily gaps over hourly gaps? Yeah, in a way, yeah. I mean, me personally, I treat all gaps the same. I normally when I do gaps, the lowest time frame I go to is the 15-minute. You should see the gap on all of the time frame, but yeah, definitely the higher time frame, I'm gonna prioritize that first. Actually, when I'm looking for gaps, I start from the higher time frame and work my way down. So like if I see a daily gap, I'm literally gonna focus on that daily gap, right? I don't care about nothing else. Like I'm using a higher time frame, whatever, to like make that trade. All right, but let me show you guys a good example of this, okay? And sometimes, like I said, this is why I don't trade in between the gap, is because stuff like this happens. So I'm about to draw this gap level, right? I'm just trying to, it's gonna take practice, guys, but I promise you it's extremely profitable when you use it. I promise you. Y'all gonna be like, bro, what the hell? Okay. So look, and this is actually me. I think I talked to the admins about this the other day about a strategy that I'm gonna be like working on. But okay, do y'all see that gap that we had at first before this happened? Let me do the replay mode. Let me just do that because I be having people, Jay, why didn't you put it there? I'm like, bro, it's a replay mode for a reason. Okay, so everybody see this gap right here. All right, so you have two ways of trading this. Okay, like I said, if you have a gap below, so let me put this in the notes, right? Actually, I think this will help you guys a lot. Stay with me, guys. Put this in your notes. Gap. If the gap is below, how do I want to word this so to make it simple? If the gap is below, we want to look for calls. Somebody give me a good way to like word this. Gap below means calls. I'm gonna just say equal calls or look for calls. Gap below equals look for calls / bounces. Does that make sense? Do this part make sense? So if we have a gap below, we are looking for calls or bounces. Do anybody know why we're looking for calls or bounces with a gap below? If you get this wrong, class is over. But I'm saying why? Like, why is it? No, I'm saying like why does a gap below? What do that means? A gap below means what? If we see a gap below, that means what did the stock price do? No, not rejection. It gapped up, right? The stock price gapped up, right? That means buyers are what? Buyers are strong, right? Because it gapped up. So if it gapped up, that's already automatically telling you what? It's going up. I don't let the below take you off because that's why I was trying. It was like a trick. A gap below is actually bullish because a gap below means that price has gapped up, right? That means a gap. If we see a gap below, that means buyers have now, increased the price. You feel me? Like, y'all get what I'm trying to say? I'm trying to say it in a way to make it make sense. But basically, if a gap is below, that means the stock price gapped up. That's what created the low gap, right? Now, what is the equivalent for what is, and it don't matter if it's an uptrend or a downtrend, a gap up is a gap up, right? We're talking about just this strategy with the gaps, right? Don't focus on the trend and all that right now. We're just most likely if it's a gap up, it's like in a short-term uptrend anyway. So if the gap is above, what are we looking for? We're looking, there we go. We're looking for puts / rejections. Why are we looking for puts / rejections? More selling power, that means the stock did what? It gapped down, right? So we're going to be looking for puts because the stock has gapped down. There you go. Do that make sense? Anybody confused on that? Put this in your notes, guys. Anybody confused on it? It's really simple. Don't let the wording throw you off, right? It's real. I promise you, it's simple. If you see a gap above, you're looking for puts / rejections, right? Because if you see a gap above, that means a stock gap down, right? That explains Boeing, right? Boeing had a gap above, right? So whenever it filled the gap, we were looking for rejections. Let me go back to that because maybe some people got kind of thrown off by that, right? Let's go look at the Boeing trade, right? What was this gap? It was above the price action, right? Remember that. It was above the price action, okay? Stay with me, guys. It was above the price action. Now, there's some cases where we still take calls, but I'm trying to get y'all like the overall, right? So we got this candle here. Price is below the gap, okay? So what do this mean? This is a gap what? In this scenario, what are we looking for? This is a gap above. What are we looking for? Right? The stock price gap down. So let me, okay, that's how I'm gonna do it, because that's probably what's throwing people off. The gap above, the gap. Okay, the stock price gap down. So where is the gap? If the stock price gap down, where's the gap? Above, right? So we're looking for what? Puts and what? Rejections, okay? I think a simpler way of saying it is gap down equal price down equal puts. I get it. Y'all get it. Y'all can have put it however y'all want to do it. Okay. So we got the gap above, right? So now we're looking for rejections at that level, right? So we're either looking for rejections here or we're looking for rejections here. Okay. We plot that and then we let price run. And then whenever it gets to our level, we make our trading opportunity. So there we go. Broke above, boom, taking puts. And there we go. That's simple, guys. It say, to be honest, I get it, Jay, but you make it confusing. Nah, it's y'all making it confusing because it's y'all. It's okay, bro. It's simple. I'm pretty sure everybody get it now. So we all good. We all good. We all good. Okay. So let's go look at some more examples. Yes, this worked with every ticker. At first, I didn't know that it worked with every ticker until now. So it works with every ticker right now. In this market, for some reason, it worked with every ticker. I'm about to do some more examples. Are you saying it's gapping above the last candle form? That question just confused the hell out of me. I'm not even gonna sit here and lie to you. That question, whatever you just asked, that question just confused me. I don't even. I legit don't even know. I'm gonna do some more though. Hold on. Okay, trying to get y'all a good one. We're gonna do a couple more. Oh, HD has some good ones. Well, I put HD in my notes, so I'm trying to see why I put it in there. I put it in there for a reason. Why did I put HD in my notes? And it's gonna take some time, like eyeing them. Okay, so here we go. We got a bigger gap right here. And like I said, guys, the stock market, I want to be very transparent with you guys. The stock market is still going to do whatever it wants to do. So like I said, sometimes some BS like this will happen. So let me go ahead and show you. Like, I'm just being honest with you guys. Like, the stock market is still going to do what it want to do. Like I said, this is a strategy, right? Not every strategy is going to be 100%. But this strategy, I'm not gonna lie, this strategy is extremely profitable. And I'm pretty sure you guys can tell that anybody that traded, it's extremely profitable doing it. It's a pretty simple strategy. So like right here, we have the gap above, okay? So we got a gap above. So now we're looking for what? We have this gap above. What are we looking for? Puts, right? We're looking for rejections, okay? So I'm deleting the gap and I'm now going to actually just make the levels, right? So I know I want to keep those levels there, right? So I know if it gets there, I want to take rejections. So let's play it and let's see what happens. Okay. All right. So right here, what happened right here, guys? It rejected, right? Even though it broke above, it still rejected, right? This is called what? What is this called though? What do we call this? A what? Liquidity grab. Also a head fake. This could be a lot of things. That's why I said the market is still the market is still gonna do what it wants to do, and you will have this sometimes. I promise you, it's annoying as shit, but sometimes you will have this where it breaks above the gap level just a little bit, and then it rejects, right? And I have a way to teach you guys like kind of like how to trade it and all that stuff like this. But overall, it still worked, right? It still rejected it and it came down. Okay. Gave you a nice, that gave you a nice ass trade. It rejected from, this is a $30 drop. So, you know what I mean? Like it, like I said, it ain't gonna be perfect every time. Like sometimes it's just gonna be annoying as hell and, do what it gotta do, right? But I want to show you how this gap level came back to play. So just watch it. Just watch that level. The best time frame is a daily time frame, obviously. That's like the best one in my opinion. But so like we just waiting. And this real quick while we talking about this, what helps me when it comes to like gap levels and all of that is it actually keeps my patience in check as well. Because a lot of times I will try to like short or like do other trades like that's not at that significant level. And you will see a lot of the times you get caught. Like, for example, if you just had did puts in this area, what would have happened? What would have most likely happened? You would have got chopped up, most likely, right? Here again, you try to puts again, you know what I'm saying? So it was just annoying as hell trying to trade in this. You feel me? So like, but you see, once it hit that level, what happened? It was a pretty much clean move down. You didn't have much going on, right? So that's what another thing, it keeps you a little more patient. Like I said, this strategy definitely takes more patience, but like I said, once it works, it works. So like see, like it's also the daily time frame as well. So obviously the daily time frame gonna move a little more. So yeah, this is a great question. So the next question was, while we wait on this, it was, so if you take the first level, would your stop loss be past the second level? Depends, right? It depends on the time frame you're on. Okay, that's number one. Let's stop it right there. It depends on the time frame you on, and the reason why I say that is if you have a if you're taking a gap level rejection on a daily time frame, right? You're having your stop loss at the top of that one, that will be pretty wide, right? Because this will be a from this level to that level, this is a about a $10 difference. So that will pretty much, your contracts are worthless, right? So it depends on the time frame that you're on, right? So for me in this instinct, right, if I would have took my first entry here, right, because I'm not gonna say a lot of you guys, what you want to do is, this is what I'm gonna be honest, this is what you want to do, right? I'm not finna sit here and lie to you like I'm some saint that follows my rules to a T. But normally, kind of what I do, and like I said, it's personal preference, right? I have a little higher risk tolerance, and I also have other things that I look at when I'm trading. Like maybe at the time, SPY was rejecting a resistance level, and then when I'm looking at HD, I'm like, okay, well, it's approaching gap level. I, kind of as soon as it hit the level, I might just take puts, right? Like regardless what candle that it is, you know what I mean? That's not the best thing to do, but depending on your risk tolerance, I'm okay with going negative a little bit, you know, to get, what I'm saying? Like, do y'all mean what I'm saying? Like, I will go, I will kind of risk going negative a little bit just by getting in because I might see something else on like SPY. In this situation, I would have got, effed up. You feel me? I would have got messed up pretty bad because if I took rejections as soon as I seen it flash that level, as you can see, it popped about $4 on me, right? So I would have been looking dumb, right? And then I would have been texting you guys and like, man, the market is scam when it had, came back to the next one. But in reality, I should have just waited until what? I should have waited until what on here? What, when they got to this level, what should I have waited to see on this level? Wait, but also what? What do I want to see? I want to see, I say it all the time, not a retest. I want to obviously want to see the drop. I'm saying, what is the terminology that I'm looking for? No. There we go. We got multi-time frame analysis. What do I want to see on the other time frames? Bearish what? Bear, you got it, right? Something bearish, right? So there you go. This is what it ties back. So this is now I'm putting it all together. I want you guys to like kind of like let's put it all together, right? Because I know a lot of traders are like, Jay, well, you had just took it at that level. Well, it depends on your risk tolerance, but otherwise, the number one thing is if you're on a daily time frame, what you want to do is you want to use what I call multi-time frame analysis, right? So how this particular trade would have went, we would have seen that HD is at the gap level, right? It's triggering the gap level, right? It might not have touched this one yet, but it's triggering it. So for us to take puts, we would have then moved down to the lower time frame and then position ourselves for entries, right? So let's see on what we see on the lower time frame that would have positioned us for entry on this play, right? So let's go look. So let's go down here. Let's go to the 4 hour. So, okay. So on the 4 hour, you wouldn't even have, and sometimes also guys, whenever you see this where I plotted my level on the daily time frame, and then when I came to a lower time frame, my level was off, it's the same gap, just move it down, you get a more accurate level. Everybody listen to what I just said. Sometimes when you plot your gap on the daily level, it'd be like a little bit above, just come down to the lower time frame and move it down. You will get a better accurate level. That's literally that should make sense. I'm not even gonna make that more complicated than what it is. Okay. So initially, when we hit that gap level, what happened? Right here, this is the one we're looking at. When we hit that gap level, before the bearish engulfing, what we had took it as soon as it hit it. Probably not, right? Because as soon as it hit it, it didn't really give us any bearish confirmation to take this trade at all, right? What was bearish right here that told us to take this trade on these candles? What was bearish? The doji, I ain't gonna lie. That's not a bad. The person that said doji, I'm not even gonna stay here and lie. That wouldn't have been bad. That wouldn't have been bad. If you seen that we hit that level and then the next candle was a doji and then you shorted here, that's totally fine. That is actually, I'm not even gonna be mad at you because I probably would have did the same thing. I'm not even gonna sit here and lie to you, right? I probably would have did the same thing. And you know, just the market, you would have just got stopped out, right? That's just part of the game, okay? But after that, what then? But that's why I try to tell people, guys, just because you get stopped out don't mean that the trade is over, right? You just got a bad entry. I tell people that all the time. How many of you guys have ever took a trade, you got stopped out, and then the trade ended up going your way, but you didn't take it because you were mad that you got stopped out, right? And that's what I get people do that a lot of times is they did all of this work looking at the charts, and then they just get a bad entry, and then maybe like a couple of days later, the stock do exactly what they wanted it to do, right? We literally like, okay, we want to take this gap level rejection, but we got stopped out here because we seen it hit this level, then a doji candle came, and then we just ended up getting stopped up the next day. So what happens is you be like, man, F8, Home Depot, I'm done trading this stock. This stock is stupid as hell. But then here we go. It was green already, then it showed you a rejection. And then you missed the entire move. The entire move because your level would have been down here. It literally went exactly to your level. I'm telling you, this is the exact trade I would have took. I promise you, this is the exact trade I would have took this trade, right? Most likely this exact scenario would have happened to me. I would have took the rejection here, been up a little bit, maybe like 5% here, came back, gave my 5% back. I probably would have swung it, got stopped out in the morning, seen this bearish engulfing. I would have been like, oh, well, FHD, I'm not trading it no more. And then a couple of days later, I look back at it and I'm like, damn, HD then dropped $30, $36 to be exact. You know what I mean? So that's why I'm trying to get people to see, like, just because you get stopped out don't mean that the trade is over. You just got a bad entry. So on here, you got stopped out here, but then like somebody just said, what then gave you confirmation to take this trade? Yeah, I just said it. Wait, but I'm saying, what is this? This is a candlestick pattern right here. This is a candlestick pattern right here. What candlestick pattern is this? This is a bearish engulfing, right? Make sure that you guys, a bearish engulfing. All a bearish engulfing is is if a large red candle is bigger than the green candle that's in front of it. That's literally all. It don't matter if it's up high, up low, in the middle. It don't matter. If that red candle is larger than the previous candle, the green candle, that is a bearish engulfing, right? It's that simple, right? So then once you have seen the bearish engulfing at the gap level, even though it fakes out a little bit, that's what we call a liquidity grab. That happens, right? That's okay, right? That's okay. Calm down, guys. It happens. Fake outs, liquidity grabs, it's all a part of trading, right? So then once you've seen that bearish engulfing, now you can take the trade, right? So for me, I'm gonna just, and we're gonna get more into this when it comes to more like, you know, deeper in classes. But for me, this is actually when I would have took this trade because, okay, right here, I would have took it right here. I'm not about to sit here and lie to you guys. I would have definitely took it right there, right? I would have took my first entry here. I would have got stopped out that next morning. So now when I see that, you know, we got this green candle and we kind of rejecting to go lower, then I would have took it below this candle's low, that green candle low. Yeah, see that? Let me zoom in. That's just my type of energy. And that was my type of trade. Yeah, see that? So now that I got shaken out here, faked out, now I'm gonna take it below this candle's close. And then that's my stop loss. So this is how I would have looked. Let me get my box for you guys. So probably would have took it there. Stop loss would have been like a close above. Entry would have been here. And my target would have been down here. I know that target is a crazy ass target, but I'm saying that would have been my, well, my first target probably been like right here. Okay, let me delete that. Make sense? Right? I took it on that candle low. Once we broke that candle low, I took my puts, and then if we broke back above here in this area, I would have cut it. As long as we're not breaking above that, there's no reason to get out this trade. But we also I can also go to the lower time frame as well. We can, because we're on the 4 hour, we can even go to even lower time frame, guys. We don't have to be on this one. So let's go look at another time frame. Let's go look at the hourly. Okay, so here go the same setup, right? So this is that gap level we talking about. That was, I was on a 4 hour, the one I was just on, right? I was on a 4 hour. Now I'm on the 1 hour. Okay. And remember, this is a daily gap. Okay, so don't if candles can break above, that's totally fine. This is a daily gap, right? All right, so now look at here, right? We broke below. You could even call it on the retest of that entry, right? It's so many ways you could have did it, guys. Like it's literally like it's the possibilities of entries are endless, right? But it all started with rejection of that gap level. Like you could have did a bro, there's so many entries on this. You could have did below this candle low. You could have did, you know, below that bearish. I know a lot of traders do this. So this candle, this is that bearish engulfing candle that we're talking about. So what some people do is they get the low of that candle with the wick, and then they get a retest kind of trade. You guys see that? Like entries are, the entries depend on the type of trader that you want to be, like the type of trader you are. But like that was another entry. Like some people, they'd be like, okay, I want to take it below the bearish engulfing candles low. So how it would have worked is you could have took it there. You know, once we broke below, could have took it there. Probably would have got stopped out because it got that strong ass pullback. So some people do the retest of that candles low. Like it's so many possibilities. Like it's crazy. I don't want you guys thinking like one entry fits all. It's just kind of like your personal preference. I will say this though, the lower the time frame, the more technical you have to be. You feel me? So like on the 4 hour, when we go back to the 4 hour, you know, this was pretty simple. I mean, it was literally, you know, if we took it from the 4 hour, we could have got a better entry, right? So me personally, I like to stick to the higher time frame right now in the trading space that I'm in. I kind of been sticking with the higher time frames because they give the higher percentages. And there's like the picture is a lot cleaner. So for me, I like that momentum. It got the 4 hour kind of got me in this trade a little early. Versus the 1 hour, when I'm looking at it, if I was on the lower time frames, I probably wouldn't even have took this trade And like I said, until we had that retest below that candle's low. So right here, I wouldn't even have took it here. For me personally, if I was looking at the 1 hour time frame, I would have took it below this. Let me just do this. Below this candle. We're looking at this bearish engulfing candle right here. I would have took it below that low on a retest, right? So I would have took it, boom, we broke below. Once we retested it, I would have took it there. And then y'all see we gap down, we had a way cleaner trade that way. Did that make sense? Like it's endless possibilities, guys. That's why I try to tell people, like, don't give up on the trade. Let's say that you missed that. I mean, this is a better look anyway. Like, let's go look at this hourly right here. Look, what candlestick pattern is this? Well, what candlestick is this? This is a what? Y'all know this is my favorite one. Actually, I don't think I taught this one. I talk about it a lot, but I don't think I talked about this one. So we got people saying shooting star. You got a shooting star. Somebody said Death Star. I never heard of that one. Somebody said Head and Shoulders. It is a Head and Shoulders. So let me go draw that real quick. Also, I'm trying to see, let's see who really been in the classes. What made this more bearish? What made this Head and Shoulders more bearish? I'm just now like really trying to get y'all to like understand the multi-time frame analysis. What made this sell even more bearish? The right shoulder is lower than the left shoulder. So what do that mean? You got your breaker structure, right? But also, what do that mean? Weakness, right? They were not, the bulls were not strong enough to push us back to these highs, right? So that's also another thing. But yeah, this is the Head and Shoulders for anybody that can't see. I got you. So let me go ahead and draw it for you. Oh shit. Hold on, y'all. Y'all know when I come to this trading view shit. And there we go. Make sense? Did anybody see that? That's what I'm saying. Like, it depends on what you see. This is where multi-time frame analysis come in at, because guess what? You seen maybe on a 4 hour, you seen a what? Like, I'm really trying to get you guys to understand multi-time frame analysis, but also utilizing every tool that I'm giving you guys. So we got the gap. Let's run it all down. We got a daily gap, right? We got a daily gap, correct? Anybody with me? We got the gap from the daily time frame. Can everybody confirm that that's where we got the gap from? Okay. Now, what did we see on the 4 hour that told us bearish? What did we see on the 4 hour? A bearish engulfing. All right. What do we see on the 1 hour? A shooting star, Head and Shoulders, bearish engulfing, a retest, right? So it's giving you more confirmation. So it's like, okay, now let's delete all that, right? Let's delete all this. Let me get my gap level back. 336. People always ask me all the time about entries. I'm like, guys, depends on what time frame you own. Like, different time frame gives you different entries, but it all comes down to the same thing. You know what I mean? So let's go to the 30 minute. Let's see if we see anything differently on the 30 minute. Hold on, my bad. I got that damn thing still on. Hold on. All right, so let's see if we see anything on the 30 minute that's differently from what we already done had. Damn, where did this come from? This is not, I didn't mean to act that. My bad, y'all. Let me delete that. We got too many on here. This is the gap level right here. This is, let me color code it for my people that's probably just not coming in. Gap levels are going to be yellow. We're just gonna make them yellow. So if you see a yellow one on there, they're yellow, okay? So now we're looking for any entries we could have got on the 30-minute time frame. So like I said, on the 30-minute time frame, you probably would have took, you know, this shooting star breakdown on that retest of that candle's low. What else? I'm trying to think. I think that's probably was it. Yeah, that probably was it as far as entries. you might have seen the head and shoulders a little faster. I mean, you don't want to go too low now. Like I'll be having people be like, "Oh, Jay, I see someone a weekly and they come all the way down to the 1 minute." Like, no, that's not unless you about to scalp it. Like, you know what I mean? You shouldn't have to go that low. But just for being extra purposes, I would go that low for you guys. It ain't even showing me that far back. Okay, but do y'all get what I mean? Like, do y'all like kind of get what like the kind of the idea of kind of like how it works? I'm about to go over some more gap levels, but I'm just trying to get you guys to understand. Like, I'm not taking my entries off the daily time frame, you know, depending on the setup, right? I'm going off of multi-time frame analysis. What time frames tell me to entry, right? You might like what you see more on the 1 hour. For example, this actually is how, like, for my auto trader members, right? This is actually how me and Jada Trader work, right? I will see something on the daily. So then when Jada Trader goes to look for it, he like, I don't really see an entry yet, right? But since I already see something that I personally like on a higher time frame, to me, it's saying, okay, the entry is now. But so to me personally, like I said, I would have like when we literally go look at this trade, let's go back to the trade one more time. I'm just trying to get y'all to understand, and we're gonna go over entries and stuff more into detail, but I'm just trying to get you guys to understand for my strategy, this taking it below this bearish engulfing, taking it below this close right here, that candle's close and this bearish engulfing, that was enough confirmation for me to take the trade, right? So for me personally, I would have took HD puts at 133.80. You know what I mean? So I would have took them at 133.80, and I've been in profit. But for some people, they might not like that. They might not like that entry. They might like it under the low, right? Under that candle's low, right? For the retest. Okay, so let's go there. Let's go to the 1 hour. Okay, they might not like fucking bearish engulfing. Excuse my language, but they might not like that. Oh, this the candle, my bad. They might take it under that 1 hour candle low, right? They might have liked the retest better, the head and shoulders better. They might have liked that better. So for them, they took entries at, I took my entries at 133.85. They took entries at 130.18. You know what I mean? So I was able, because of what I personally like to do as a trader, I was able to catch it $3 before the other person. Not saying neither one of us is wrong. We just have different preferences, right? Depending on the contract, it depends. Like, it depends. Most of the time, if it's a Monday, I'm gonna take a weekly, regardless on how long it took to get to my level. But yeah, normally you want to pick however long it took to get there. That's kind of how long you want to go out to go back down there. So for example, if your target is here, so let's go back to the daily because I'm not going to count all these candles. Hold on. So on this particular trade, it took, ooh, bro, I don't feel like doing this math. What is that? It took 22 days. It took about, we're just gonna round it up. It took about 22 days to get from here to here. So that basically would mean you want to buy 3 weeks out, right? Because 3 weeks, 20, y'all get what I'm saying? Like if you wanted to go from here to here, you will at least want to buy 3 weeks out. 22, you know, do that make sense? That's like how you supposed to do it. But like I said, I'm a DJ, you know, so some days I think it's gonna go there in 2 days. You know what I mean? Like it just depends on your personal preference, you know, because it definitely didn't take that long to get there. Let me see, 21st. So it took 22, 23 days to get from here to here, but it only took 10 days to get from here to here. So you know what I mean? Like it depends, but you guys get the picture. You guys, you understand, right? You know. So but yeah, so like I said, different entries, but let's go do a little bit more gap levels, and then there we go. I like that. I actually like that. That's hard. It was a staircase up and an elevator down. That's actually nice. All right. Do anybody have any examples? Oh, I also said we're gonna teach the little breakout parts. So hold on. Here we go with Netflix. This is actually a trade that I missed, but I don't like running puts on Netflix anyway because Netflix strong as hell, right? All right, so look at Netflix, right? I can't make this up, guys. Like if you don't use the gap levels, I don't know what to tell you because I can't make this up, right? I can't. Everybody's seen that wide gap on Netflix, right? Let me do my replay mode. All right, so everybody see this gap on Netflix. This one right here. Yep. All right, cool, cool. So now let's make our levels. So we got the gap level. I'm tripping. This is the gap, my bad. That one. Okay. And there we go. So let's see how that gap level played out. A gap like this, if it breaks above, you take calls. My way, you take calls. But let's just see, you know. I'm gonna get into like what I look at, but yeah, it depends. I'm about to really put y'all on game how y'all can use a strategy for like different stuff. Like, do any of you guys use tape? Any of you guys use tape? Oh wait, damn, I was missing it. Hold on. First of all, let me pause it. Do y'all see how accurately it was like, you know, rejecting that gap level? Like, I just want you guys to see how effective it is. Like, look at that. Look how it literally was rejecting the level. It could not get past that particular level, right? So now when you're looking for breakouts, you want to take calls above, you know, for that depends on what you're trying to do, right? If it's consolidating under the gap, you can do stuff like that, right? But I'm just trying to get you guys to see how effective the gap levels are. Okay, so all right, so look, what did it do? Once we hit that gap level, what did it do? Reject, right? And this is a nice rejection. And like I said, I'm gonna get into calls in a minute, but you guys, I'm just trying to get you guys to see the power of the levels. And I'm gonna tell y'all, like, if you use tape or if you use volume or anything, I'm gonna show you exactly how, like, you could have used that, right? So once they hit that level, it showed clear rejections. You see the wicks, and it rejected from 331 all the way to about the low of 280. So that was 20 plus. There was a $50 rejection off of that level. You should like you get trade. You don't even need that much, right? You could have just took the first rejection and just after one day of swinging, like if you took it as soon as it hit it, after one day, like literally the next day, it gapped down $20 for you. You get what I'm saying? So it's like you didn't even need that whole 50. You know what I mean? Like it's just the daily gap levels are crazy, right? You just needed one day and you already up 500, 200, 1,000%, right? But I'm just trying to get you guys to understand that. So like, okay, boom, we tried again. What did it do? It rejected again. So all right, boom, I'm buying swings, right? But look, hold on. What did we create inside this gap? We did what? We created another what? Gap, right? So this is, and I'm just going off, this is what I like to do. So even though it filled the gap, normally when it's filled, I leave it alone. But sometimes just depends, sometimes if there's no clear level right now, sometimes I would just, leave that level on there in case price comes back to it. You know what I mean? That's just me. I'm not about to try to confuse you guys. Just sometimes I leave it just to see if it'll ever come back to it. And I don't even know why I just showed you that. But I literally don't know why I just showed you that because that's just gonna confuse y'all even more. But we just get more into that. But I'm just trying to get you guys to see the gap levels. But let me show you. Look, rejected again. Actually, this is the reject. We're in that rejection right now. I didn't even notice that. So like if you took it, wait, ain't Netflix, didn't it just gap up for earnings? But I'm saying like you could have did it, you feel me? So like there you go. right? You got a clean rejection. Like I'm saying, you don't need it to go all the way down there. You don't need it to go all the way to the low. I mean, literally a couple of days of rejection. Like I said, it dropped. What is that? Like $16, $15, $16, give or take, right? So you don't need that much to make a nice profit. You're not gonna hold all the way down there anyway. I don't know if people be focused on that. You know damn well you're not about to hold to these lows. So there's no point of you even looking at them because you're not going to hold it, right? But is everybody understanding that somebody said they will? Some people will. Like I've seen people, they will legit hold it until they get to that point, right? But like, do everybody kind of see how I'm using the gap levels? Like it's a pretty easy, simple strategy, but it is patient. It's patient as hell. Like you really got to be patient for it to work, right? You have to be patient or else it's not going to work. All right, let's go look at one more example. Somebody said Exxon. Let me see. Like I said, it's just gonna take practice. Exxon, I do not see the gap on Exxon just yet. Yep, earnings gap. So, well, I don't know whoever just said something about Exxon. They probably, I don't know what they're looking at. Oh, I see it. Okay, I see it. Here we go. Sometimes you gotta, look real deep into it like that. Okay, so here go the gap. It was a gap here, right? It kind of like this, right? So let's go look at that. So let's go plot the levels from right there. And it was the gap. Remember, because this was the original gap. This is why I like the replay mode, because people be like so confused. Let me do the replay mode real quick. I see the gap now. So this is what it looked like. So y'all kind of see what I mean. And that's why I say, guys, go on TradingView and practice the gap levels. Literally, you can practice it. This is when I be telling you guys I'm back testing, I'm working, this is what I'm doing. I'm using the replay mode. I'm looking for where I could have entered, what on the lower time frame showed the rejection a lot quicker. Like that's literally what I'm doing, right? So we got this gap and I'm plotting the gap levels. Let me draw the gap first so nobody can confuse. So this is what the gap looked like on a daily time frame. You drew it. Like I said, after I draw it, I normally just delete it because I want to, get the levels. I don't care about the actual gap itself. Okay. So boom, now we're going to let it play out. So now it's above. So we're looking for what? The gap is above. We're looking for what? Puts, right? We're looking for puts rejections. Okay. So there we go. Let's see what we did. So there we go. Boom. First thing. What did it do? Come on, y'all. Come on, man. What did it do? Reject the first level. Like I said, it can reject the first one or reject the second one. What did it do? It rejected, right? And this was a, let me do the math correctly. I'm sorry, y'all. I'm pulling out the calculator because I'm having a slow moment. I don't know what 11 minus 3 is. I literally having a slow moment right now. All right, that was an $8 move. I can't believe I literally was just struggling. Hey, chill. Actually, it was a $9 move because it went to 102. Chill. I literally was sitting like my brain just went out for a minute. But look, it rejected the gap level. There we go. So now let's look at it when it came back. Because mind you, the gap isn't filled yet, right? So all right, so look. So boom, it came back up. All right, so now we're at what? We're at that top gap level now, right? Y'all see it? Yeah, talking about use y'all fingers. I hella just pulled out my phone. But y'all see, now we're at that gap level now. So what are we looking for? Yeah, if it ain't over 10,000, I don't know. But look, we're looking for rejections, right? So then look, boom, what did it do? Currently in that rejection, right? That's what I'm saying. You don't need, like I be trying to tell people this all the time. Bro, you don't need all of this, right? You took the rejection from here and whatever, bro. You caught a nice red candle. What more do you need? You don't, that is, this rejection depending on where you caught it from. This was about a $3 rejection on Exxon. That's 100, maybe 150%, depending on, whatever, you know what I mean? So I think that y'all starting to get it, but let me do one. I feel like I need one more. So depends. That first rejection, if you seen bearish on the multi-time frame, you would have caught that first rejection. And then when it came back up, like I said, when it gave you another bearish confirmation, then you would took it again. So these first two candles, you probably wouldn't have caught it, or if you did, you probably would have got shaken out. But once you got this bearish, I call this candle right here, this is called a bearish pin bar, right? This is what I call it. Or you can say shooting star, doji, however you want to do it. A candle like this is normally, I just say a bearish pin bar. So once I seen that, once you started to come back below, boom, take it that next candle. You wake up the next morning, you up 100%, right? Pretty simple, right? Somebody said with these particular trades would be swings, but it all depends on the time frame. I'm just showing you gaps on the daily because they show a little better. But like you can do 15-minute time frame. If you use a gap level on a 15-minute time frame, that's literally going to be probably a day trade or maybe like a longer day trade. If you use gaps on, or even a scalp, like maybe you just want to scalp a few points off of that gap level, it's the possibilities are endless, guys. Like it don't matter. But normally the daily 4-hour, 15-minute, those are solid. Those are normally the ones I do. Kind of what I do is if I see a gap on the 15-minute time frame, I kind of just like normally like just day trade it real quick. So let me see if I had one on XPX again. Let's just go to the 15-minute. Like I said, the time frame just matters the speed of the trade, right? So for this particular trade, this was a day trade for me. I know the contracts were on BS, but this is the day trade for me. Okay, literally, as I'm literally waiting here, right? I buy the puts. This is a 15-minute time frame gap, right? I see that we're at that gap level. What do? I take puts, and it's pretty much a day trade. The contracts, I can play with the contract because I plan on selling that day. So I can do OTDE. I can do this week expiration. It just depends on my risk tolerance, right? This is a day trade. But if I seen this same exact setup on a daily time frame, what would that be, guys? If I seen on the daily time frame, that'd be a swing, right? So it's the same strategy. It's just on a different time frame. That's literally the only difference, right? So tonight, I want you guys to go practice gap levels. I promise you, once you start using gap levels, you're going to become addicted because like you will see how profitable they are. Like it's really extremely profitable. You will be kind of crazy, but it is going to take profits. It is going to take profit. I mean, it is going to take some time. For example, let me go do it because I always say that I'm a bear. I always talk about I'm a bear. So let me go ahead and use another call example for my people that like to do calls, right? Y'all always talking about I'm always trying to be a bear. So let me go ahead and do a little call one. I'm trying to think where the best way to pull this from. Okay, right here. That's fine. All right, so here's another example. All right, so we have a gap from here to here. Everybody see this gap from here to here? Okay, cool. So now I'm looking for a bounce. This is where we have like, Jay, how do you know a stock is going to bounce? The gap is now below. The stock has did what? The stock did what? It gapped up, right? So now that it gapped up and the gap is now below price, what am I now looking for? I'm looking for calls, a bounce, right? Calls or a bounce. So now this is exactly what I will put in the chat. Literally, this is exactly, I'm giving y'all, y'all can never say I don't give y'all what I use on a day-to-day basis. Exactly what I would say. I would say, guys, I'm looking for calls around, I'm looking for a bounce around 38.05. Exactly what I would say. I'm looking for a bounce around 38.05. I know there's another gap. Focus on this one right now for now. We get that one in a minute. But I'm just trying to get you to see this part, right? So I'm looking for a bounce because that gap was never filled. Even though it created a new one, the old one was never filled either. And it's so close, it's a possibility that it can come to that gap. You know what I mean? Because this one was never solved. Every gap is still valid until it is filled, right? So that gap is still valid. It created a new one too. So this trade would have been a little harder, but overall, let's just focus on, I'm just trying to get you to see. So automatically, depending on your strategy, automatically, as soon as it hit, it sometimes it's not going to hit automatically. Sometimes it's going to hit, it might bounce a little bit before. Sometimes it might go below and then bounce. It's personal preference. But some people would have caught a scalp from there. I've literally seen it all the time. They catch a quick 2-candle scalp and they done. But overall, we're just watching this level. There we go. Okay, hold on. Okay, so you see how it created like this little double bottom, equal bottoms here. At that level, it couldn't break below. That's all I try to tell y'all. Don't be so quick to take those breakdowns because sometimes it pulls right back up. Do y'all see what I'm talking about? We're a little paying attention to this level. Actually, I got it. It's right there. Okay. So in this case, I probably wouldn't even got caught in that because knowing me, I would have waited for it to come below the level a little bit because a lot of the times when the stock is getting ready to rocket, it kind of like come below a level, then goes off. That's just my personal preference. That's kind of what I've seen a lot of the times. That's just me. But yeah. So as you can see, boom, we bounced off that level. I'm signaling calls or whatever. And there you go. Obviously, it came back and smoked you, but you would have caught a nice little trade from there to there. There you go. All right. People like, oh, Jay, it came back on you. Well, if you know, this is, hey, this is the best example I can give you right now. But y'all understand the gaps. You know, some stuff gonna play better than the other ones. But overall, there we go. From this low to that high, you probably, you know, I'm just trying to show you how accurate it was. This was a 78-point gap. I mean, bounce off that gap level. 78 points. That's a lot of points. That's like maybe like 300% off of that level, if I can correctly, depend on the contracts you got. But that's like pretty big. So that's like, it don't look like a big move, but that was a big ass move. 78 points. So but yeah. Let me see. But yeah, like if you want to trade gap fills, like it's so many, the possibilities are endless, guys. Like if you want to trade gap fills, it's literally just, you already know how to make gaps. So if the stock breaks below, you just take puts to fill the gap. Like it's literally so many opportunities. So let me kind of give y'all a trade that I'm looking at, like to kind of give y'all an idea of something that hasn't happened yet. So this hasn't happened yet, okay? So I'm gonna show y'all this and then we done. I'm gonna call class after this one, just so y'all can kind of get a perspective of something that hasn't happened yet. All right, so right now we have this gap still on Twillo. Okay, kind of already didn't fill part of the gap, so then we size the gap down lower. So now we have our new gap, right? So the trading opportunity I'm looking for on Twillo is this. I have two things. Either, and you haven't heard me signal Twillo because nothing is ready yet, right? I'm looking for Twillo calls above what? Because this is a daily gap, so I can take calls now, only because it's wide, you know what I'm saying? It's wider, so taking calls will actually not be a bad thing. There's three ways I could take this, right? Number one, in a bearish case, I'm just looking for what? In a bearish case, I'm just looking for what? At this level. If it's bearish, like I said, you can take the rejection where it comes to that level, and once it comes to that level, it rejects off that level. That's bearish case. A bullish case will be if we break that level, I can just take calls right away and try to get it to the next level. Another bullish case is what? Y'all already know what I'm finna say. Somebody say get it right. Or break a retest. So another bullish case, which I will personally prefer myself, is a break above this level, retest this level, and then go up, right? But so you see how with that gap level, I have now created 3 different, and you can say 4, because if it breaks above this level, then I can take rejections of that level back down. So we have created off of the gap strategies, just whatever, we have created 4 different trading opportunities at those 2 levels. We don't know which one is going to happen. We don't know none of that. The only thing we know is whenever it gets to those levels, we're going to do what? We're going to have our steps. We're going to do what? Once it gets to those levels, we're going to do what? We're going to use what? Multi-time frame analysis, right? That's literally all that we're going to do, right? We don't know what it's going to do at that level, but we do know once it gets to either one of those levels, we're going to use multi-time frame analysis. Rail says SPY for confirmation. You can use that as well. Depending on that, I will, if I were you, I would obviously use the market for confirmation. If we're going to be breaking above this gap, I want to see SPY breaking above something, or, you know, strong or whatever, right? It's totally up to you. Can you straddle this? I mean, yeah, if that's what you like to do. If you want to like take calls and puts, and then I guess me personally, I probably wouldn't do all of that. But I mean, you could do, you know. Yeah, I wouldn't, but like I said, you know, you can do what you want to do. I would probably, I feel like that's kind of like, I feel like if you straddling something like this, like I feel like straddle should kind of be for the unknown. Like if you trade in something that's unknown, like no matter what you do on the chart, it's like unknown, like earnings or, you know, CPI data or something like that. But like something that you can actually look at, you know what I mean? Like something that you actually look at and use multi-time frame analysis, like it shouldn't be no need for a straddle. You know what I mean? It's like it shouldn't be no need for that. But let me see. At the start of the gap on the first candle, shouldn't that have been the put? At the start of the gap. Oh, you talking about here? Okay, so the question is, and then we're done after this, because like we're still on this, so that's why we're going at. So the question was, at the start of the gap, shouldn't that have been the put? Remember what I said in the chat, guys. I mean, remember what I said. Okay, this strategy, you are correct. Yes, we would have wanted it to be a put, right? Why? Because the gap is above, so we would have been looking for rejections. But remind you what I told you, because I'm actually glad that you said that, because I don't want people doing this. Hey, I already know how this is gonna go. I'm gonna make sure I like make this known now, just so we get this clear understanding. Just because like it's more likely for it to reject, don't mean that it's going to reject, right? Like I said, the strategy works. It's a very good strategy. It works a lot of the time, but it's not going to work every time. So I don't want you guys thinking that every single time you see a gap above, as soon as it gets to that level, take rejection. No, that's not how it works, right? You can still take puts whenever you want to on a rejection, but understand there is a possibility that it will break above, right? And that's why I tell people, if you're going to do that way, just cut it. As soon as it shows you that it's wrong, it's no reason for you to hold this trade any longer, right? It proves to you that you're wrong, and move on. For example, okay, what about the break and retest strategy, right? We broke above, right? And then I was looking for the retest. Then I was going to do this, right? I just said that I was going to take calls. What happened? It got to that level, it just broke right through it, right? So not every time the strategy is going to work every single time, right? The goal is to basically use the proper risk management and then have a strategy that works more than it loses, that wins more than it loses. For me personally, for this strategy, I can tell you right now, it wins more than it loses, right? So how do you win in trading? Let's say that over time, that every time I see this setup, I'm going in with $500, right? And every time that I'm wrong, I probably lose like 100. Well, if the strategy has proven to be profitable, that means even if you lose $100 when you're wrong, every time it works, you make 500. Over time, you're going to be a profitable trader. You're making money. Not every time it's going to win. Not every time it's going to lose. it has proven to win more than to lose. And the more that you use the strategy, the better you get at it, right? So I know I'm gonna have like, I hate when I teach strategies, because then when I be doing stuff outside the strategy, people be like, Jay, what are you doing? It's like, okay, guys, hold on. I've been doing this strategy way longer than you have. So sometimes I see things that you probably haven't been able to see yet, because, for example, I took Boeing before it actually rejected, right? Boeing was a big ass green candle before it rejected, and I took it. Why? Because I used other factors, other things, and experience of the strategy that allowed me to take Boeing entry early, right? For you personally, if you're new, or you're like getting into trading, or you don't understand the strategy yet, you might have took Boeing a little later, right? It's two different persons, it's two different, like, you know what I mean? Like, that's why I tell people, you need to find a strategy that you like, and you need to stick to that strategy. Whether it's mine, because I got a couple strategies. I do break and retest, I do the gap levels, rejections. It depends, right? But the goal is to find a strategy that you like, that's simple, that you're able to understand, and focus on that strategy. You want to learn the ins and outs of that strategy. When does it work the best? When doesn't it work the best, right? And that's how you build your confidence up, okay? Do that make sense? Yeah, it's all those dangerous. Uh, unless you say, that's what I'm saying. Like, I ain't gonna lie, that is annoying when it comes to strategies. Once you taking back-to-back L's, but that just normally when stuff like that happens, you just gotta kind of sit back, reflect, and kind of go over your strategy again and see if you got something wrong. And see if you got something wrong, right? So it could be something that you might have got wrong yourself, right? It's just part of the game. I hate when that shit happens, though. I'm not even gonna sit here and lie to you. But most of the time, I would just say my personal experience, when I be on losing streaks, it be because I did something else outside of my strategy. It don't be because of my actual strategy, in my opinion. It'd be like I might have like changed something up, or something I didn't like something, I started doing something else. That's normally when my losses occur. And then when I go back to my strategy, that's when my losses start, stop being so many. I just, that's just a human error. When you start, maybe when you take a loss or maybe two losses, you kind of like, oh man, my strategy broke, and you see somebody else's strategy winning, and you might like kind of steer off to their strategy, and then you end up getting smoked. And then when you finally go back to your strategy, then life be good again, right? That's normally when I be on losing streaks. That's normally what happens. That's normally what happens to me. I'm in a losing streak right now. Hey, just focus on the strategy, focus on what you like, and just go at it. I was just on a losing streak. I actually just got out of my losing streak. So just understand that losing streaks are normal. Literally, guys, losing streaks happen. They're normal. The only way you're able to survive losing streaks is still risk management. I know I get tired of hearing risk management, but that's literally the only way you're going to win is risk management. That's it. Like, losing streaks shouldn't matter when your risk management is right. For example, like the last couple days this week, I've been kind of averaging, my winning days have been a little over $10,000 this week. And when I did have a loser day this week, it was like $80, right? That is what you call risk management. When I win it, I can win 10,000. When I lose, I'm losing less than $100. Like, that is literally, it's the same size, same everything, but the risk management is changing the game. You feel me? And that's just how I go. So make sure that y'all, go back and watch this recording. Are you making more money off MT4? Options picked up this week. Before then, yes, I was making way more money off of MT4. Options did start picking up this week. But yeah, I would say I'm making more money on MT4 this year than options. Can we have a class? Yeah. We can have a class on CDFs. I'm definitely going to teach you guys more about the MT4 platform, but I think my strategy works a little better with CDFs, only because with options, these little unnecessary ass pullbacks be making your contracts get messed up. So not only are you cutting because of the stock is going against you, but more mainly because of the contract is like really dying, and the stock might not even have did that much to make you stop out. So that's kind of where MT4 is a little better, but yeah, these contracts, hey, yeah, these contracts been pretty rough these last couple of days. So yeah, live trading is actually, it's not gonna be on Monday, it's gonna be on Tuesday. I will be traveling back in town on Monday. So live trading will be on Tuesday. So we getting back to live trading. Everything's gonna be good. It'll be on Tuesday. Yeah, I ain't gonna fake it though. These contracts been having me buy some time. Like it'd be like, man, I ain't even about to mess with a weekly. I'm not even about to touch a weekly. And then every time I touch a weekly, I always pay for it. I noticed that about this market. Every time I touch a weekly, I'm paying for it. Every time. Every time. Every time. Like I don't know what it is. But all right, guys. This was good. I hope that you guys learned something today. I will see you guys on Tuesday. I gotta go look back at the schedule. But other than that, guys, this class will be uploaded tonight. So don't be looking, it will 100% guaranteed you it'll be uploaded tonight. So make sure that you're able to come back and check the class out. Go practice the strategy. Don't wake up tomorrow and see a gap and try to trade. Do not wake up tomorrow, see a gap, and try to trade it. Go get your ass on trading view and practice the strategy first, and then you go use it. Too many of y'all, I teach y'all something and y'all try to do it tomorrow. It might work the first day. So you're like, oh shit, what Jay just taught me worked the first day. So then guess what you're gonna do? It worked the first time you tried it. And then you decide to, all right, well, next time it happens, I'm gonna throw 10K on it. And that be the time you get messed up. And then you call me a scammer, you say the strategy don't work, then you quit, blow an account, and it's just all bad. Go practice it first and then try it. Yeah, relative strength is next. That's the next class. I can't wait to teach that class. I have never taught that. So I'm actually super excited to teach that. So make sure that you guys are at the next class and we will get started.